Folks, are you tired of losing your money in the stock market and really want to make some serious money now? Then this video is for you, because today we are diving into 3 of the best rising penny stocks to buy according to hedge funds that have the potential to make you rich. These are not random picks. These are stocks backed with solid fundamentals, promising futures, and the backing of Wall Street insiders who see long-term opportunity in them. So if you're serious about making money in the stock market, make sure to watch till the end, and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on the list is Tilray Brands Incorporated, trading on the NASDAQ under the ticker TLRY. Tilray is one of the world's most recognized cannabis and wellness companies. But what makes it truly unique is how it has diversified beyond cannabis into beverages, pharmaceuticals, and lifestyle brands. Tilray owns a wide range of businesses across the globe, positioning itself as more than just a cannabis producer. Financially, Tilray has faced its share of challenges. In its most recent quarterly report, the company posted revenue of $224.5 million, missing analyst estimates of $229.2 million by a small margin, marking a 2.3% year-over-year decline. The headline numbers might not impress at first, but there are positive signs. The company's adjusted EBITDA came in at $27.64 million, beating estimates by 16.7%, reflecting improved operational efficiency. However, Tilray reported a GAAP EPS loss of -$1.30, which was far worse than analyst estimates of -3 cents. This miss was largely due to a $1.4 billion one-time impairment charge, which also sent the company's operating margin plummeting to -643% compared to -7.2% in the same quarter last year. Free cash flow also came in at -$13.15 million, down significantly from $28.34 million in the same period last year. At the moment, the stock trades around $1.37 per share, with a market capitalization of $696.9 million. Analysts remain divided on the stock. Based on recent coverage, the average price target is $1.11, with a high forecast of $2 and a low forecast of 60 cents. That average target implies a potential downside of about 20%, but the high-end forecast suggests that Tilray could still nearly double from current levels if management executes its strategy effectively. Next on the list is United States Antimony Corporation, trading on the NYSE American Exchange under the ticker UEMY. Unlike Tilray, this company is not in consumer goods, but instead in the world of mining and specialty chemicals. United States Antimony Corporation produces and sells antimony, precious metals like gold and silver, and zeolite products. Antimony itself is a critical mineral used in flame retardants, batteries, semiconductors, and even defense applications. It's one of those underappreciated elements that quietly powers the backbone of modern technology and safety infrastructure. UEMY reported revenue of $10.53 million, beating expectations by nearly $600,000. Even though sales volume dipped slightly, higher antimony prices more than compensated, boosting top-line results. What really stood out was profitability. The company's gross profit increased 183% year-over-year thanks to better pricing and reduced maintenance costs. Net income came in at $728,000, which represents a 707% year-over-year increase. For a company of this size, such explosive profit growth is a strong sign that management is making the right moves. The company has also expanded its network of antimony ore suppliers and increased processing capacity, ensuring that it can meet growing demand. Beyond financials, the stock has also been attracting institutional interest. Over 120 institutional funds are now invested, with institutional ownership rising to 24% of its public float. This is important because hedge fund interest adds stability to small-cap stocks that often suffer from high volatility. Currently trading at $4.59, the average Wall Street price target is $4.88, with a high forecast of $5.25 and a low forecast of $4.50. That suggests limited upside from here, but what investors really like is the consistent execution, the strong market positioning in a critical mineral, and the company's ability to generate real profits. The long-term potential is significant because antimony is considered a strategic material, and demand is expected to rise as its uses in batteries and fire-resistant materials grow. Hedge funds like stability in the small-cap space, and UEMY offers exactly that with a strong balance sheet, profitability, and exposure to strategic markets. Last on our list is Wheels Up Experience Incorporated, trading on the NYSE under the ticker UP. Wheels Up operates in the private aviation industry, offering on-demand private flights and membership programs that provide access to a global fleet of aircraft. Private aviation is often viewed as an ultra-luxury service, but Wheels Up has been attempting to democratize access to private flights by providing flexible membership options and leveraging a mix of owned, leased, and partnered aircraft. This strategy allows it to reach a broader audience beyond just billionaires and ultra-wealthy individuals. From a financial perspective, Wheels Up reported revenue of $189.6 million, which was down 3% year-over-year, but gross profit improved significantly to $2.2 million, a $13.2 million improvement compared to the same period last year. Total gross bookings remained steady at $261.9 million, which is an encouraging sign that demand for private flights remains resilient. The adjusted contribution came in at $23.1 million, reflecting a margin of 12.2%, up 4 percentage points year-over-year. Although the company still posted a net loss of $82.3 million, this was a 15% improvement year-over-year. Adjusted EBITDA loss also narrowed to $29.0 million, a 22% improvement, and adjusted EBITDA loss was $25.1 million, a 13% improvement. These numbers demonstrate that while Wheels Up isn't profitable yet, it is moving in the right direction and showing consistent improvements in efficiency and margins. The stock currently trades around $2.91 with a market cap of $1.67 billion. Over the past 12 months, it has traded between a low of 74 cents and a high of $2.78, showing just how volatile it can be. However, the recent positive momentum and the company's strategic focus on core operations suggest that Wheels Up could continue to gain traction, especially if private aviation demand remains strong in the post-pandemic world. Hedge funds like the turnaround story here, because if Wheels Up can reach profitability, the upside from current levels could be significant. Well, that concludes our list of the best rising penny stocks to buy according to hedge funds. Each of these companies has solid fundamentals, a vision for growth, and the attention of Wall Street, making them worth keeping on your radar. Remember that penny stocks can be risky, but with risk comes opportunity, and the key is to identify those with real business models and strong future potential. Tilray, United States Antimony Corporation, and Wheels Up each bring something different to the table, and for investors willing to take calculated risks, they could be the ticket to substantial profits in the months ahead.